Welcome traders, this is Mike Hamilton and you are looking at the daily chart of the Euro US dollar, and I just want to talk to you about what I think is going on here. The fibs are taken from the 2015 high, so the January open through to the March the 2015 lows. So clearly we dropped hard. We consolidated. This is a typical behavior pattern of a very well trending market, which is clearly defined by this 20 EMA, which is why I love this 20 EMA. I think it's nice and it's tighter than the 50, and I think the actual direction of the 20 clearly depicts the overall trend. So we buffer against it, we hit resistance. We drift lower, typical in a consolidation period. We get some pushes to the high side, the sellers come in, and eventually they have to drop it. There's so many people short, the only way they can release volume in this is to drop it and get people to come in and out of their contracts on the way down. Go through the same process. Consolidate, we drop, only this time we get a reversal pattern, and then we push higher back into this resistance area. Drop, pull back, we drop, pull back. So at the moment we are still firmly in a downtrend. The 20 EMA is here. So on this push to the upside that we had yesterday, all we did was just push up into this resistance area here. So I suggested to guys in the room, if you are a Euro bear, that's the next place where you might want to get short. If you're a Euro bull, this is the next place you might want to pick up a pullback. You know, if you get a reversal pattern, then this is typically you'll get a reversal pattern. I actually traded, I should have traded the very level down there because that was a beautiful fib level. I took not a lot of points. I think I took about 20, 25 plus points. I mean, I missed it in the morning, and what I should have done is focused on this morning. I didn't. Focused on the pound US dollar. I got caught in a very tight range, and so today I think I might have made a tiny profit. I mean, it's one of those days. But as we're in summer doldrums, this is the kind of markets you're going to get presented with. So for the bulls, is this bullish or is this bearish? Well, here's the reversal range, and we are sitting in the middle of it with very little data this week. We are incredibly light on data this week. Post options, it's not untypical to get some kind of bounce. So if the month's trend up to options has been, let me get rid of that. If the beginning of the month was bearish, it's typical after options to get some kind of bounce. I'll go through the cycle, the sort of typical monthly cycle on Next Traders Roundtable. But so we've got a sort of a post options bounce here. And the only way I would confirm there's a complete reversal is if we close above that level of resistance. That level of resistance is 109.70. All the time we're under here. We might just come up and nick the 20 EMA and then roll over. Let's be very clear about what this trend is at the moment. These moving averages we've got here, 20, 50 and 100. So 20, 100 and 200 I should say. They're wide open. They are wide open, and the wider they are, the better the trend. This was a pivotal point here. So we pushed up, it had a very big up day, very big push up into that. But all we did was close the gap from a huge gap down, and all the sellers came back into it, and then here we are, just about clinging on to this support level. The key thing that I've been talking about for ages is that the 127 extension on the 2015 range pinpoints parity. So if you are long this market, I'm sure you're gonna, if you're a dedicated Euro bull, you're gonna stay put anyway, aren't you? That's why you're long. But what I would say is if we start to break this low, this month's low, then be careful. In the meantime, we've got this buyer's bar, and all the time we are at least sitting in the middle of that buyer's bar, we stand a chance of at least testing the 20. Alright, so apart from that little move to the upside off of that support, I'm not in this at the moment. On the smaller time frames, we are holding pivots. 109, you can see here, is a key pivot. So all the time we're above 109, we stand a chance of seeing a continuation of this recovery. I would just be very wary of moves into these areas I've got marked here. But close above that, and that is a potential wedge breakout. So we are very much in an apex, but not confirmed reversal yet. Alright, so moving along. This is the pound US dollar. I got trapped in this morning. I shorted too low down on a data setup in a very slow, very weak market. It took literally all day just to get a little bit of profit out of it. So my mistake for shorting too low. This level up here is very congested up here. I should have been shorting up there. A little bit of lack of concentration. In the meantime, where is this one going? Well, if we all the time we're holding a 20 EMA, I think we stand a chance of pushing higher. If we get a weak US jobs number tomorrow, I think this could actually get a bit of a push. The Bank of England are making it quite clear that we are getting much closer to a rate rise. I guess the big question is the US going to raise rates quicker than the UK? If the Dow holds into the end of the summer, into the early autumn, I think September is definitely on the cards. If I was Fed chair, I would do a 10 basis points rate rise in September or even August and just get it over and done with. Markets expecting it. I think the quicker you do a nominal interest rate rise and get it out of the way, the better for the markets. The longer you leave it, the bigger the bubble and the harder this may fall. So, case for the bulls, we are holding. This is a massive level here, this 550, huge, and we are holding it as a stopping bar to me. In other words, this little move to the downside may be over. The fact we're holding the 20 EMA is crucial. So I'll look for a buy signal in the early Euro session and then see if that can get a bit of a pop. Because I do like the way this 200 EMA is come down and is bending up. I like the way the 100 is coming across, and I like the way the 20 is holding. So if we get 100 and 200 cross, a nice golden cross, and then we could see that tip up, which would match the pattern that we had here in July 13. Yeah. Downward pressure, push into resistance, pull back, pushes up, makes a higher high, pushes down into support, and then each little phase, each little wave gets bought. We get a nice area of support here building up, and then we blast off, pull back to the box and go. And that could be what we are heading for here. If that is the case, that might help the Euro US lift. I think the pound might drag the euro up with it. Alright, this one has been a dream. Now, we talked about this kind of behaviour, this kind of pattern on Traders Roundtable on Monday. With this and the pound CAD, I mean, these are clearly high. So the novice might think to himself, wow, this is really high. We're RSI is up there, surely this is going to drop hard. You know, it's had its run, nice big, you know, it's time for a pullback. Not so. You know, all the time you are channeling, the trick is to buy the bottom of the channel and potentially sell the higher the channel. So one way you could do it is trade the range. You could buy, you see a buying pattern down here, you can have a long-term contract, hold it, and then trade around it. Buy near-term contract, sell, near-time contract, sell. All the time you've got your long-term contract here, waiting for a 127 or potentially 161 extension. All right, good way to build a big position with risking the least amount of money. In fact, in many cases, if you follow that style of trading, a lot of the time you've got a free trade. You haven't got any risk, or very minimal risk. And the pullbacks in this one are still getting bought. We just had a dip to 212.25, and we're now to 211.70 nearly. So the pound is very strong. If you didn't catch yesterday's low, which was, you know, after a quite hard drop, which is understandable, just be patient. Just see if, you know, we can get some sellers in here, and we can get you know, a full test of the 20 EMA at some stage, and then start reaching for the sky. So be patient. Let's look at the indices. Clearly, you know, patterns, mastering patterns is very, very important. We are clearly in a weekly downtrend now, and looking to see if this area here can hold. What I'd like to see is a bounce up into this area here, or somewhere around here, and then get short. I'm hoping the rest of the summer we can drop and get back into the top of this channel somewhere around here, and then get short, and then see if we can't get some, you know, some decent moves, potentially down to 1600, bounce back, and then who knows. But you know, this is a distribution pattern. Now we are seeing selling after wave of selling after wave of selling, and we are getting lower lows. Alright, so if you want to trade this, we're obviously coming into the 200 EMA here. It's all, once the move is underway, it's always a little bit harder and trickier to get into it. But if you do get a pullback, you've got weekly jobs tomorrow. If the weekly jobs pushes that a little higher, and we bounce off the 200, then leave it. I would suggest you might want to leave it, unless you're a good day trader, and then wait to see if you can get a retest of these higher areas here. Okay, I do hope that helps. Gold and oil are just drifting lower. So a quick look at oil. My target for oil is down here, around about the 40-45 mark, currently under 50. Yeah, this comes back to what I started off by saying about the euro. You've got something that's clearly on a downtrend, and maybe you've missed out on it, and you've watched that, and it's gone lower, lower, lower. There are still opportunities in a market like this. You just wait until you get to a higher end of the. You just play a rubber band trade. Wait until you get a reversal pattern. Don't trade the reversal pattern. Stay away from it. But watch for resistance levels. And then any pullbacks short. But I think that is the way that is going. Note that the 20 EMA here again has picked out very, very clearly the trend. Alright, I hope you found that useful. Anything else you want clarifying or talking about, so I'll either do it in the room tomorrow or drop me an email. Thanks very much for listening, and I do hope you'll join me for the next video. Thanks very much. Bye for now.